Good morning and Jai Hind. Today's video comprises of Good morning and Jai Hind. In today's video, we are going to learn about cash flow statement. As the name of the topic suggests, cash flow, that any statement which uh, inform us, which tell us about the flow of the cash. That means the inflow and outflow of the cash. The inflow of the cash, uh, it happens when a cash is received by the firm, and cash outflow happens when we uses the cash for the payments of the services or any raw material or any kind of material, or in the purchase of any asset. If we have done that, then cash flow occurs, and this whole happens for a period of time. And all this cash inflow and outflow is comes under three activities: operating activity, investing activity, and financing activity. We will discuss about these activities individually in detail. Now, let us see how all these activities affect the cash pool of the firm. In case of operating activity, when the cash receipt exceeds the cash expenditure, then it causes a inflow of cash. While if the cash expenditure or cash expenses exceed the cash receipt or revenue, then it occurs the outflow of cash. Next is the investing activity. When a firm sells its property, plant, or any kind of equipment, or sell any debt or equity security, or uh, collection of loans to other entity, it results in the cash inflow. While the if a firm purchases the property, plant, and equipment, or purchase the debt and equity securities of other entity, and loan to other entities, this results in the cash outflow. In case of financing activity, if a firm issue the equity securities or issue the debentures, bonds, any kind of debts, this results in the inflow of cash. While if a firm pay a dividend or uh, redeem the debentures or any kind of debt, or reacquisition of capital stock, this results in the outflow of cash. So we have classified three activities under the cash flow, that is operating activity, financing, and investing activity. In case of operating activity, how the cash is affected, which activities affected the cash, let us see them individually. In case of cash flow, the inflow occurs when a firm makes a cash sales. That means anything a firm sold and cash is received. This is not a credit sale, this is a cash sale. But if you have done a if a firm had done a credit sale, then of course there would be debtors, and in case a debtors made payment for their credit sale, then also the cash is increased in the firm, or we may say it would be a cash inflow. If any kind of commission or fees is received by the firm, then again it results into a cash inflow. Any kind of royalty received by the firm will definitely increase the cash inflow. While the cash inflow, except that there would be a cash outflow also. And how does it occur? By the cash purchase. That means, as just similar to the cash sales, if a firm purchases some material, some goods from some other party, outer party, then payment has to be made, and if the payment is done in cash, then definitely it will decrease the cash in the firm, or if we may say that this would be a cash outflow. Payment to creditors. If a firm has made sales, have purchased something on credit, then definitely the payment has to be made in uh, future days. So if the payment has been done to the creditors for the goods you have purchased earlier, so it would result in a cash outflow only. Cash operating expenses, that means any expenses which occurred in during the operation of a business, then those expenses will also decrease the cash in the firm, or as a payment has to be made, so it would result in the cash outflow only. Payment of wages, again the payment is to be done, that means cash is going out of the firm. Income tax, the tax has to be paid to the government, so firm has to make the payment again, so the cash is going out of the firm. Manufacturing expenses, if a firm is a manufacturing firm, so a firm has to incur some expenses, has to make some expenses on manufacturing, so all those expenses also reduces the cash in the firm, or we may say it would be a cash outflow, which under the category of operating activities. Now let us see the, the activities under investing which results in cash inflow and outflow. The sale of fixed assets. When a firm sold its fixed assets, and it would definitely, it's not a day-to-day operation, that's why this comes under an investing activity. So if a fixed assets is sold in a market, so it would definitely bring the cash receipt, and so it would be termed as a cash inflow. Sale in investment, any kind of investment you have, and a firm is selling that, then definitely this would increase the cash in the firm and termed as cash inflow. Interest received, if a firm has made any investment in outer parties, has given has purchased the debentures of some other party, then interest would be received on behalf of that, and that interest would be considered as cash inflow for the firm. Dividend received, similarly like debentures, if a firm has spent or purchased some shares of some other entity, then dividend would be received on a specific period of time, then though that dividend would increase the cash in the firm and considered as a cash inflow. Working capital recovery, we are quite sure about what is working capital, that is current assets minus current liability, and this working capital helps in the operation of a business in of day-to-day life. So, and that is of short period also, this is not for the long period, as current assets and current liabilities are involved in this is only for the less than 1 year period. So this also, if recovery is done, so it would increase the cash inflow of the firm. Now cash outflow, if a firm purchases any kind of investment of fixed assets, or if there is a increase in working capital, then definitely it would results in the cash outflow, that is cash is going out of the firm. Now in case of financing activities, the cash inflow results due to the issue of share in cash or issue of debenture in cash. For raising the capital, it is very usual method which is used by the firm is to issue their shares or debentures, and by issuing the shares and debentures, the public used to deposit the money as their ownership in exchange of the shares which they are going to receive. So that amount that is deposited by the public would be termed as a cash inflow for the firm. And if any type of long term borrowings have been done by the firm, either from bank or any financial institution, then that also would result in the cash inflow. While in cash outflow, if any kind of payment is done for the loan or for the dividend or interest, or any kind of repayment has been done for the finance or lease liability, or including that if any kind of redemption has been done for the preference share or for the debentures, then it will result in the cash outflow for the firm.